But let's keep an eye out on JK Paper as well, because they too are in focus today. And today we're joined by Mr. Veerappan KR, CFO at JK Paper this afternoon. Thank you so much, sir, for joining in with us to talk about your numbers. And so, what I want to talk about is this time seems like a bit of a weak set of numbers that has come in from the company, led by lower realizations, higher input costs, as well as lower demand in Q2. Now, these are the factors that we saw coming into play for Q2. But now, looking forward, what is the outlook that you have for the second half of the year, and could we expect an improvement in terms of Q3, both in terms of demand as well as realization?
Yes, you did mention about the Q2. Let me just talk segment-wise. If you take writing and printing is concerned, Q2 was a little bit of an off-season, but we expect Q3 and Q4, the demand is expected to pick up. So we don't see any concern there. So the demand is going to be good. As far as packaging board is concerned, Q2 was more of a festive demand, and we did quite well in terms of volume in Q2. And Q3, generally post-Diwali, the volume comes down. Now this time, mid of November is Diwali. So Q3 will be more or less similar to Q2 levels. And from Q4 onwards, we expect the demand to go up. As far as, and you did talk about realization, let me talk about the pricing also. And see, last year, all of you are aware that we had an abnormally at peak level. So reaching that last year's level is not going to be, and it was not expected, and we don't envisage that. And Q2, the prices had bottomed out. And the good news is right now, the prices have started picking up again. And everything matters. It all depends on the international, how the international paper prices move. And at this point of time, we do see writing and printing slightly realization going up. And packaging board is also expected to definitely, it has bottomed out and will not go further below down. And from August onwards, already we see an increasing trend. So Q3 and Q4 from a pricing point of view should be reasonably better.
Well, sir, on the input cost side, that too rose in the quarter gone by, which impacted the margins both sequentially and on a YY basis also. But now, how are the raw material prices looking like for both paper and packaging segment? And consequently, do you expect your margins to increase in the second half?
So as far as the major raw material is the wood. Wood is, and this wood is more of a seasonal nature. I think all of you should be aware. In the cycle post-COVID, the entire plantation it suffered a lot during the COVID period, which the impact of which is being seen by the industry now. So first of all, the availability of wood is a serious concern. We have also started thinking of importing wood. I mean, that's the scenario. So price has gone up, and we do see next 2 quarters also this is going to remain volatile, and it will be on the similar trend or increasing trend. So that's going to be a challenge. So the input cost is a challenge, especially the wood is going to be a challenge. As far as other raw materials are concerned, coal and all is reasonably under control. And the wood is going to be the major challenge.
And how is the on-ground demand in this quarter? Are the festive orders picking up and aiding the packaging demand now?
I think I mentioned as far as writing and printing, demand is going to be good. Packaging board revolves around the festive season, and that you saw an uptick in Q2, and it will be there till October. October has also been good, and generally post-November, post-Diwali, the demand gets slowed down a little bit, and then it picks up from Q4. So from a volume perspective, in packaging board, Q3 will be more or less similar to Q2, and Q4 will be better.
And what are your other major capital expenditure and expansion plans, say, for the next 2 or 3 years?
I think last quarter we did mention that we are getting into BCTMP pulp, because that is one where for our packaging board we are dependent on imports in some source BCTMP pulp. So this is going to be a good thing for us. It's around 650 crore project. That's going to be a huge capex in the next 2 years. So right now that is what we are working on that. And at this point of time, we don't envisage any major capex of this size.
Well, thank you for giving us those details.